Canada is undergoing a major transformation in its approach to global trade. This transformation is not just a shift in policy, but a comprehensive rethinking of how Canada engages with the world economically. Gone are the days of relying solely on its southern neighbor. The historical dependence on the United States for trade is being re-evaluated as Canada seeks to diversify its economic partnerships. Canada is forging its own path, diversifying its trade partnerships, and asserting itself as a key player on the world stage. This new direction is marked by proactive engagement with a variety of global markets. This shift is driven by a number of factors, including the changing geopolitical landscape, the rise of protectionism, and the need to secure new markets for Canadian goods and services. The global economic environment is evolving, and Canada is adapting to these changes with strategic foresight. At the heart of Canada's trade transformation is a strategic pivot towards the European Union and other key economies. This pivot is not just about finding new markets but also about building long-term sustainable economic relationships. Canada recognizes the importance of strengthening ties with like-minded partners who share its values of free trade, multilateralism, and the rules-based international order. These partnerships are crucial for maintaining a stable and predictable trading environment. This strategic realignment is not just about economic expediency, it's about securing Canada's place in a rapidly changing world. By expanding its trade horizons, Canada is positioning itself to be more resilient and competitive on the global stage. The cornerstone of this new era in Canadian trade policy is the Comprehensive Economic and Trade Agreement, or CETA, with the European Union. This agreement represents a significant milestone in Canada's trade history. This landmark agreement, which came into force provisionally in 2017, has eliminated tariffs on 98% of goods traded between Canada and the EU. The removal of these barriers has opened up new opportunities for Canadian businesses and consumers alike. CETA is a testament to Canada's commitment to free trade and its desire to deepen its economic ties with Europe. The benefits of this agreement are already being felt across various sectors of the Canadian economy. Canada's trade transformation is a work in progress, but it is already having a significant impact on the country's economy and its place in the world. The positive effects of these new trade policies are becoming increasingly evident. As Canada continues to chart its own course in global trade, it will be important to monitor how these changes play out in the years to come. The future of Canada's trade landscape looks promising, with potential for even greater growth and diversification. The Comprehensive Economic and Trade Agreement, or CETA, is much more than a simple trade deal. It represents a deepening of the relationship between Canada and the European Union. This agreement has been years in the making, with negotiations beginning in 2009. It finally entered into force provisionally in 2017, demonstrating the complexities of international trade agreements. CETA goes beyond traditional trade agreements by addressing a wide range of areas, including the elimination of tariffs, investment protection, and regulatory cooperation. One of the most significant aspects of CETA is its impact on tariffs. With 98% of tariffs eliminated, businesses on both sides of the Atlantic are enjoying increased access to each other's markets. The agreement also provides a framework for resolving investment disputes and promotes regulatory cooperation. This is crucial for businesses operating in both Canada and the EU, as it provides greater certainty and predictability. CETA is a testament to the commitment of both Canada and the EU to free and open trade. It serves as a model for future trade agreements and strengthens the transatlantic bond between these two important economic blocs. As Canada continues to diversify its trade partners, CETA will remain a cornerstone of its international trade strategy. The ongoing war in Ukraine has sent shockwaves through the global energy market, highlighting the interconnectedness of global supply chains and the delicate balance of energy dependencies. The conflict has underscored the geopolitical forces at play, revealing the vulnerabilities and strategic maneuvers of nations dependent on energy imports. Europe's reliance on Russian energy exports has been starkly exposed, leading to significant price volatility and heightened concerns about energy security across the continent. This crisis has created both challenges and opportunities for Canada, a major energy producer with a long history of responsible resource development and innovation in the energy sector. Canada is home to the world's third-largest proven oil reserves and is a significant exporter of natural gas, playing a crucial role in the global energy landscape. The country is also a leader in renewable energy, boasting vast hydroelectric resources and a rapidly growing wind and solar energy sector, which are essential for a sustainable future. This diverse energy portfolio positions Canada well to address the global energy crisis and contribute to global energy security, ensuring a stable supply of energy to meet international demands. In response to the crisis, Canada has pledged to increase energy exports to Europe, providing a reliable and stable alternative to Russian supplies, thereby supporting European energy security. The Canadian government has also announced plans to accelerate the development of energy infrastructure, such as pipelines and liquefied natural gas terminals, to facilitate increased exports and strengthen global energy networks. Canada's response to the Ukraine war and its impact on the global energy market demonstrates the country's commitment to international cooperation and its role as a responsible energy producer, dedicated to maintaining global energy stability. As the world grapples with the challenges of climate change and energy security, Canada is well positioned to play a leading role in shaping the future of global energy, balancing economic growth with environmental stewardship. The US and Canada share the world's largest and most integrated bilateral trading relationship, a partnership that has been built over decades of cooperation and mutual benefit. With billions of dollars in goods and services crossing the border each day, this trade nexus is a lifeline for both economies. However, this vital economic partnership is not without its challenges. The complexities of international trade often lead to disagreements and disputes. Trade tensions have emerged in recent years, fueled by disagreements over various sectors and policies. Disputes over softwood lumber, dairy products, and other sectors have been particularly contentious, affecting industries and communities on both sides of the border. The Buy American provisions in US legislation have also raised concerns in Canada, as they could potentially disadvantage Canadian businesses and disrupt the balance of trade. Canadian businesses, especially small and medium-sized enterprises, fear that these provisions could limit their access to the US market. These trade tensions have the potential to disrupt cross-border supply chains, leading to delays and inefficiencies in production and distribution. Increased costs for businesses and consumers are a direct consequence, as tariffs and trade barriers drive up prices. This can damage the overall economic relationship between the two countries, potentially leading to a downturn in economic activity and growth. Moreover, trade disputes can spill over into the political realm, straining the historically close ties between Washington and Ottawa and complicating diplomatic relations. The political ramifications of trade tensions can be significant, affecting not just economic policies but also broader bilateral cooperation. Despite these challenges, both countries recognize the importance of maintaining a strong and stable trading relationship. Efforts are continually made to address and resolve disputes. The US and Canada are each other's largest trading partners, with trade volumes that reflect their deeply intertwined economies. The interdependence of their economies means that cooperation and compromise are essential for mutual prosperity. Continued dialogue and cooperation are essential for resolving trade disputes and ensuring the smooth functioning of this vital economic partnership. Both countries benefit from a seamless flow of goods and services, which supports jobs and economic growth on both sides of the border. Both governments have mechanisms in place to address trade irritants, such as the dispute resolution mechanisms under the United States-Mexico-Canada Agreement, or USMCA. These mechanisms provide a structured process for resolving disputes and ensuring that trade flows as smoothly as possible. However, finding mutually acceptable solutions requires political will and a commitment to compromise on both sides. It is through such efforts that the US-Canada trade nexus can continue to thrive. The future of this relationship depends on the ability of both nations to navigate challenges and seize opportunities, ensuring a prosperous and stable economic partnership for years to come.